Hi everyone, welcome back to Money Monday. This video is all about planning and preparing for interest rate rises. Over 1 million households in Australia are already experiencing mortgage stress, which means they're at risk at defaulting, which means they're at risk at having their home repossessed. Now, I do not want that to happen to you. So I need you to listen up and to plan and prepare for interest rate rises. Now, this is a great environment to be doing this because we should make hay whilst the sun shines. Use this time now in a record low interest rate environment to really get ahead so that when interest rates do start going up, and yes they will, I just don't know when, we are so ahead of the game it won't really impact us and it will not cause financial stress in our lives. Now this video is not just for Australians. It is for everyone around the world that has a debt or has a mortgage. So please make sure you subscribe to this channel because I will be doing lots of videos on giving you ideas to pay down debt. Now, before I launch into these 7 practical ideas and tips that you can implement today to start getting ahead with your mortgage, I have an important announcement to make. The $1,000 Project book is now available in your local bookshops. You can actually purchase it from the Book Depository online, you can buy it from iBooks, you can buy it from Amazon, and of course you can buy it from Booktopia. Now, I had a very special offer for all those people that pre-ordered this book, where they got access to a private and exclusive video where I shared with you guys my fears, my challenges in doing the $1,000 project, about, it's part of my personal story. And I got all these people emailing me saying they were desperate to buy the book, but were doing Frugal February with me and therefore couldn't buy it. So at your request, I have extended this special offer to March, which kind of makes sense because we're just about to start manifesting March. And the $1,000 project is all about manifesting, saving, creating, earning money in our lives, having a bit of a side hustle. So it makes sense to extend this offer. So if you purchase this book, which includes in-store and online, make sure you send me a copy of your receipt to the email address listed below. And I myself personally, no, not a robot, will email you back with the link to watch this private video. But remember, this video is for your eyes only and only for people who purchase the book. All right, moving on to Money Monday. So the 7 easy to follow practical tips are going to help you get ahead with your mortgage. If you can implement them correctly, and you don't need to do all 7 of them, maybe just 1 of them or even 2 of them, you will quickly see results and you will actually understand how easy it is to get ahead of your mortgage. Save yourself a lot of time, a lot of money and interest, and beat the banks at their own game. So listen up. Step number 1 is to make more than the minimum mortgage repayment. In Australia, when you take out a home loan, 9 times out of 10, they will put you on a 30-year term, which means it takes 30 years to eventually pay that loan off. And that's not assuming that you refinance or, extend the loan to do a renovation or something like that. Now, that is absolutely crazy that you have a 30-year mortgage. Do you want to be in your 60s and 70s still paying off a home loan? No, thank you. I want to be enjoying life. I want to be retired. Now, you're probably saying to me, well, how can I possibly find extra mortgage repayments? Well, let me give you a little bit of an incentive, which will give you a bit of a kick up the bum and will make you want to find that money to put towards your mortgage. Say, for example, you have a $500,000 mortgage and the average interest rate is around 6.5% over the life of the loan. You pay your mortgage on a monthly basis and you have been in your mortgage now for, say, 3 years. If you can find through your budget, and I recommend using the Sugar Budget app to do this, an extra $100 per month to increase your mortgage repayments, you will save just under $50,000 in interest. Now that is interest with after-tax income. You will also save 2 years and 1 month off your home loan. Now, I don't know about you, but I can do a lot with my money if I didn't have a mortgage for over 2 years. And I definitely like the sound of $50,000 with me rather than with my bank, as much as I love my bank. So if you can go through your budget and increase your minimum mortgage repayments, set them up so they're automatic. You don't actually have to remind yourself each month to add some extra money towards your mortgage. Just set it up correctly. Fit it into your budget. Make sure you will do this. I promise you, you will never regret it. And I reckon 3 months into doing this, you won't even miss the money. Tip number 2 is to fix part of your mortgage. Now, I don't recommend necessarily that people fix all of their home loan, because when you do fix your home loan, there are a lot of restrictions and I guess penalties when it comes to these type of loans. For example, a lot of banks will only let you make extra repayments of a limited amount, which is quite small, per year or per calendar year. So what I would normally suggest, and this is obviously general advice, that you make a certain portion of your loan fixed and a certain portion of your loan variable, maybe 50-50 or 75-25. It's completely up to you. And what I would recommend is you try and make extra payments towards the variable loan if that's the higher interest rate, before you start trying to bring down within the allowed amount on the fixed amount. But you want to be getting ahead with your loan. But by having a fixed loan, it will help take off the pressure and stress if and when those interest rates start to rise. But always have a think about your situation, whether having a fixed loan is right for you, especially if you're thinking of selling your home in, say, a couple of years, because there may be break fees or exit fees which can be incredibly high. So make sure you do your research before you decide anything. Idea number 3 is to make a lump sum repayment. Any little money that you can hustle on the side, maybe you'll get some fantastic ideas by following these easy to follow tips in the $1,000 project book, you can put towards paying off your home loan. Again, you might be thinking, where am I going to come up with this money, Canna? Well, guess what I found out? The average Australian receives a tax refund of $2,500 every year. Now, if you had, say, a $300,000 mortgage on a 30-year term, and you got a tax refund just once, not any other time, just once, of $2,500, and you decided to go ahead and put that on your home loan, you would save over $11,000 in interest, and you would save 7 months off your home loan. Now, that is just one extra lump sum repayment of $2,500. Imagine if you could do that every year with your tax refund. All your other bonuses and windfalls of money and pay rises, you kept and enjoyed for yourself, but you always religiously just put $2,500 a year onto your home loan. It would make such a huge difference and mean that your debt is coming down so much faster. Idea number 4 is to shop around and see if you can find another home loan at a lower interest rate. But be very careful when you are doing this. You want to make sure that there are no exit fees or penalties for changing or refinancing your home loan. And another really important tip is do not let the bank restart your term. You do not want to kickstart a new 30-year mortgage. If, for example, you are 7 years into your current mortgage and want to refinance, make sure you refinance with a 23 or a 22-year term, or potentially even smaller if you can afford it, so that you are actually paying down your home loan as quickly as possible. Avoid this trap. Tip number 5 is to do the $1,000 project. Now, round 1, I managed to hustle $32,000 in 12 months. Round 2, I managed to hustle $36,000 in 13 months. Now, I have a home loan, and if I didn't have that goal of wanting to build a passive income through a diversified share portfolio, I guarantee you that money would be put on my home loan. However, for me and this personal project, it was a different sort of passionate challenge for me. However, if I didn't have that, I would most definitely be putting all money that I made through the $1,000 project directly towards my home loan. So you can use the $1,000 project with these really simple, easy steps and ideas to manifest extra money in your world. Idea number 6 is to know your numbers. I can't tell you how many times I have sat with clients and I've asked them what their mortgage is, and they have absolutely no idea. They're like, oh yeah, something around blah, blah, blah. And then when we look at their internet banking, we're like, no, it's actually this. You need to know your numbers. Energy flows where attention goes. You need to do, every time you pay your mortgage, you must log in, and I want you to look at how much you're paying in principal reduction and how much you're paying in interest. I want you to track and monitor that. And every time, each month that goes by, you will see that small amount of interest cost slowly reducing. I want you to focus on speeding that up. Now, whilst you do this, what you are doing is opening yourself to ideas and opportunities that can potentially flow towards you to help come up with other ways to save money and other ways to earn extra money that you can then put towards accelerating this debt reduction process. This sounds a little bit flaky, but I can't tell you how much it works. And it's something I do religiously every month. The moment I pay my mortgage, 24 hours later, I log in and see, oh wow, my interest bill is getting smaller and smaller. I am getting the sensation, the feeling and seeing it of progress. And that keeps me motivated, dedicated and determined to paying off my home loan fast. And then the seventh idea to help you get on top of any interest rate rises, and that is to plan and prepare your budget. Have a look at what the impact of 3 consecutive interest rate rises would do to your mortgage. How much would your monthly or fortnightly mortgage repayments increase by? Factor that into your budget today and start doing it. See if you can survive financially with those interest rate rises. 3 interest rate rises in a course of 1 year is not unlikely. It is so important that you be real with this. Don't bury your head in the sand and understand that this is incredibly possible. By doing this now and practicing before it actually happens, it will help you prepare your budget, be on top of your expenses, and start living more realistically so that you know that you can continue on living in your home, keeping food on the table for your family and not put your finances in jeopardy. Now, that is it for this video. As I said, please make sure you subscribe. And with the book, The $1,000 Project, if you also want to get a signed copy, because all of the signed copies have actually already been sold out, you're welcome to post your copy of the book with a stamped self-addressed envelope, and I will sign it and send it straight back to you. All right, everyone, have a fantastic week. And I will see you later on the week for Lifestyle Love, as well as an update on Frugal February, how much I've saved and what I learned, and the important principles behind manifesting March. Ciao for now, everyone.